So what's the class today about? The today's class is about the area of accounting. Today we'll be talking about the basics of accounting, and we'll be also talking about the basic accounting standards as well, and along with this we'll be talking about the area of accounting cycle, that is journal, ledger, trial balance, right? So let's continue and talk about what we are going to talk. The going concern concept means that if I talk about the going concern concept, it means the concept which says that point number A, the process of the firm are enough to sustain its operations. The owners of the firms are different than the firm. Then the firm will be continuing the operation at least in the near future, or the business of the firm relates to the segment which is going well. When we talk about the term going concern means in the near future, if we see, not the very far one, I would say, because I cannot predict what is going to happen in the next 15 years, 20 years. But in the current scenario, what I feel is that the business is going to continue. It is going to thrive, or it is going to grow further. So growing concern, or the going concern, is an organization which says that it is going to continue in at least the coming future. The firm will be continuing in operation at least in the near future. That is, the firm will be continuing in operation at least in the near future. Here comes the question. Accounting standards are statements prescribed by. Who prescribes the accounting standards, everyone? The accounting standards are given by central government, ICAI, SEBI, or the Institute of Cost Accountants of India. All the accounting standards are given by ICAI, Institute of Chartered Accountant of India. If ICAI prepares all these accounting standards, earlier they used to prepare under Accounting Standards Board, now they prepare under NEFRA, that is National Financial Reporting Authority. Earlier they had given AS, now they have given IND AS. IND AS are those AS which are as per the IFRS, International Financial Reporting Standards. So we wanted to match up with the what is happening in the market today at the international level. That's why we decided to introduce IND AS, right? So let's talk about the next topic there. The correct answer is B, Institute of Chartered Accountants of India. Next question. Which of the following is or are the main principle of double entry system? Okay, I think now the question would be visible in a better way. Every business transaction there, how do we talk about it? Every business transaction has two aspects. One is receiving, one is giving. Every right hand side is always equal to right hand side. If you put 10 rupees in the books of accounts, you will always spend 10 rupees, na? That's the rule. So in this case, the correct answer is all of the above. Next question. What is the need to bring in the standardization in accounting principles? Why is there a need to standardize the accounting principles? To bring in consistency, to ensure transparency, to be comparable, or all of the above? What is the need to bring standardization in the accounting principles? See, accounting principles were introduced because of only one reason: principles, concepts, assumptions, so that there can be uniformity. Think about it, everybody was following their own rules. None of them made their books of accounts comparable to another, right? So what happened is, when they followed the accounting principles, they bought all the three things. Number one, it maintained consistency because everybody started doing the work in a similar manner. Then it brought transparency. Transparency means whatever everybody is doing, whatever is everybody following, It is clear to you. Then to be comparable, when we all follow the same methods, what will happen? We become comparable. So the answer is all of the above. Done? Now let's look at the next question. Which of the following statements about cash book is not correct? Okay, visible now? It keeps all the current cash transactions. That means it records cash receipts and cash payments. That is true. When I make the cash book, if this is my cash book, everyone, this is my cash book. When I receive money, this is called cash receipt. When I pay, it is cash payment. It keeps the records of all cash transactions, cash receipts and cash payments. It is divided into two sides, debit and credit. That is also two. This is called the debit side and this one is called the credit side. All the receipts are recorded in the credit side. Now that is point which is wrong. The receipts are on the debit side because cash book follows the rule debit what comes in, since it's a real account, and credit what goes out. So technically both the points which are given in this C point are wrong. Then it is a journal as well as ledger. True, it is the first book or the primary book as well as it's a journal as well. So in this case A, B and D are correct while C is wrong. And not only wrong, it is absolutely wrong. Done? Now let's look at the next question. Which one of the following is not a part of accounting cycle? Preparing, recording, classifying, summarizing. Preparing means to prepare all the details. Record means to note down everything. And classifying is dividing it into different accounts. And summarizing means collecting everything together and telling them what are we doing with the books of accounts. Right? Done? So according to you, what would be the correct answer? When we try to find out which one is not a part of accounting cycle, see, the point is the correct answer is preparing. Recording is a part of it. Recording is journalizing. This is ledger and this is trial balance. But there is nothing called preparing in the accounting cycle. So in this case the correct answer is that all three, that is B, C and D, are a part of accounting cycle while A isn't. So the correct answer is, in this case, A was the only thing that was wrong. Now the next point. Which of the following statements regarding the journal and the ledger is not correct? Which one among the following is not correct, everyone? The term posting means transferring the debit from the journal to the respective accounts in the ledger. The journal is a book of chronological records, while the ledger is a book for analytical record. And the last one, the ledger is the book of first entry. Number one, ledger is not the book of first entry. It is basically the secondary book. First book is always journal. Second book is ledger. So in this case, D, the ledger is the book of first entry, is totally wrong. That means all three are correct? Yes, that means all three are correct. So in this case, the correct answer is gonna be, we are looking forward to something which is already wrong, which is not correct. So that is D. The ledger is the book of first entry. Next question. In any limited company, company account is an example of nominal account, natural personal account, then artificial personal account, or representative personal account. What would be the correct answer in this case? Any limited company in example of nominal account, natural personal account, artificial personal, or representative personal. When we try to find out in case of a company is basically an artificial person, which is not like you and me, doesn't breathe, but it can buy any asset in its name. It can open up a bank account. It can buy a property in its name. It can sue anyone, and it can be sued by anybody, right? So all these things exist. So in this case, the correct answer would be it's an artificial personal account. Next point, goodwill and trademarks are examples of intangible nominal account, personal account, or real account. Goodwill and trademarks. See, goodwill is something that I cannot touch, but do you know goodwill plays a very important role? For example, if you see two brands in the market, right? Let's say there's a brand A and there is a brand B. So both the brands are available in the market, but the point is A has been there in the market for years now. B has just been introduced. What will you do? You will buy that particular brand which you already know about. Your family has been buying it, your parents would have been buying it, or your family other members have recently bought it and they would have given you good reviews. So in this case, when we talk about goodwill is the reputation of that particular thing in the market. While if I talk about the trademarks are basically those marks which identify that the particular company is working in the market. So both of these things are basically identification of the particular company in the market itself. So according to this, what are we going to do? What is going to be the answer? A, B, C, or D? Goodwill and trademarks, they are assets, but they are intangible assets. But there is nothing called intangible nominal account. Nominal account is for expense and incomes. So technically, I am going to put this out of window because there is nothing of that sort exist. Nominal account is for expense and incomes. It does not exist here. Personal account is for persons. Real account is for assets. So in this case, the correct answer is real account. Done. Next question. The question relates to the area of bank reconciliation statement. Now, bank reconciliation statement is exactly what? But the bank reconciliation is a statement which is a fight between the cash book and the passbook over only one particular thing, that is both of them are recording things differently because of different timing altogether. There might be different, not only the timing, but they can also have different that one of them, for example, passbook knows that there is bank charges deduction, but the cash book doesn't know till the time the passbook doesn't arrive, right? So which one of the following is not a feature of bank reconciliation statement? BRS is helps in arriving the actual position of the bank balance, or BRS is prepared by the bank. No, it's not prepared by the bank, it's actually prepared by the accountant. So one particular point sorted. BRS will record any delays in clearing, and BRS helps in fraud detection of the checks. See, if I talk about bank reconciliation statement, it's a statement which helps us to find out the differences in the cash book and the passbook. Whenever there is a difference, we can sort out those differences, we can find those differences, and so in this case I would say the BRS helps in achieving the exact balance. That is true. We are looking forward to which is not a feature now. So this is not a feature. BRS is not prepared by the bank. BRS is actually prepared by the accountant of the company, who indicates that there is a difference coming up in the bank balance that you are seeing and the bank balance which the bank is seeing. Right? This is where bank reconciliation statement hits in. Whenever there is a mismatch between bank balance as per our books and the bank balance originally. So in this case there is only one wrong part, that is BRS is prepared by the bank. The banks do not prepare it. A bank statement is a copy of the customer's account in the bank's book, the cash column of the cash book, cash column of the bank book, or none of the above. The bank statement is basically only and only the one which is prepared by the bank, that is, it is the passbook. So in this case this is the particular customer's account in the bank. That means bank keeps all the details of the same. So in this case the correct answer is a customer's account in the bank's book. So one is customer account as per his accountants, and the same is also maintained by the bank account. At any point of time when they have a mismatch, then we try to find out where is the difference that is occurring. If there is a difference, then what is the reason? Once you know the difference, you will try to eradicate that particular thing. So in this case, this is bank reconciliation statement. Sometimes there are certain things that happen because the passbook knows about few things which we do not know about till the time we don't go to the bank and we update our passbooks, right? Sometimes we have to wait till that time. That is what is covered here. Done? Now let's look at the next question. Reconciliation of overcasting on receipt side of cash book increases the balance as per cash, increases the balance of the passbook, decreases the balance of cash book, or decreases the balance of the passbook. In this case, when we talk about reconciliation, we are trying to reconcile over overcasting. Overcasting means on the receipt side I have shown more receipts, which is definitely not good, है ना? If we have seen more receipts, then this is not good. So this will do what? If it is showing more receipts, then your balance in the cash book is more, and the balance in the passbook would be shown lesser than what you have shown in your books. So this is basically what will happen is when you are trying to reconcile, then the particular difference will be eradicated and this will decrease the balance in the cash book. Currently it is showing more, and later on it would be reduced just to manage or meet that particular amount, right? So that's it for the day. I hope you know that your registration process has been extended for a few days, so you can check it out on the website or in the app for further details. Till then, let me show you where to go. You need to go to the area of Adda 24/7. This is where you need to go, that is www.adda247.com. As soon as you reach on to our website, that is www.adda247, you have to go down, and in this area you will find JIB and CIB. In the JIB and CIB vertical, what will you find? In the JIB and CIB vertical, this is where you will find all the options. First is we have JIB CIB Mahapak. Then we have JIB Mahapak as well, and Officers Adda Mahapak according to your requirements. JIB Mahapak would include only the JIB for this particular year, while JIB and CIB will include both the JIBs and the CIB examination. You just have to use the code August or AUG 77 to claim the discount, right? And at the same time, this is where you will find all these courses. Otherwise, what you can do is you can also take up the course in this area, JIB October 2023, and all the teachers, all the faculty classes are given here. Along with this, in this, what's gonna happen under the JIB Mahapack 2.0, you will get all the classes for JIB, right? While if you take up the Sankalp patch, in Sankalp patch you will get only the 4 subjects and the test series. So if you're looking forward to it, in JIB Mahapack you will get live classes, recorded classes, extra classes, revision batch that would be coming up. Then at the same time, we will also look forward towards the coverage of the basics for this examination as well. So in this case, it's gonna be a win-win situation. So kindly go ahead and check it out on our website or in our app, because officially what you can do is you can just use the code AUG77 and get the maximum discount. So I'll be meeting you tomorrow, everyone. For bankers, and let's continue with the particular area of our class today. Okay, here comes the first question. The question is relating to the area of, according to the concept of money measurement, the following will not be recorded in the books of accounts: simplicity of general management, death of general manager, gratuity paid to the general manager's wife after his death. We are looking forward towards money measurement concept. Okay, do you know this particular topic is always asked in the examination? So basically what happens is they put questions from these areas. For at least 1 to 2 questions can be expected. They are always asked in the examination based upon the concepts. Only a few concepts are there. I think I would say the total would be of around 15, not more than that, right? So that is even something that I am including everything in the particular area there. So if you're looking forward to it, then I believe you should do this particular part properly. When we talk about money measurement means something which can be expressed in terms of rupees, which can be expressed in terms of money there, right? So what would be among the following will not be recorded in the books of accounts, because it doesn't have the area of money measurement. Simplicity, you cannot define simplicity in terms of rupees there. Death is something that you cannot define there, right? But you can record the gratuity that you are paying to the particular person. So in this case, the correct answer is A, right? So correct answer is A. Both 1 as well as 2, they are not something that includes money measurement. The last one is something that includes money measurement. Now let's move on and talk about the next question. The next question says that practice expenses and outstanding expenses are taken into account by the firm on the basis of the following concept: prepaid expenses and outstanding expenses. Prepaid means the ones which is already paid before time and it is not even due yet, and then outstanding is something the time has gone but we haven't really included it in our books yet. Then what is it? Money measurement concept, accrual basis of accounting, cost concept, or dual aspect concept. What would be the correct answer? Prepaid expenses and outstanding expenses are taken into account duly in which area? Prepaid means something that belongs to upcoming years, and outstanding means which belongs to current year and we are taking it to the next year. Such a thing happens only in the accrual basis of accounting. Under accrual basis of accounting, we would record the things whenever we feel that there is a requirement to look forward to it. not based upon the fact that it should be done on that particular day itself only, then we'll record. That means we will not record things just because it is at that point of time paid in cash at that point. So it is not based upon cash basis, right? Okay, here comes the next question. What will be the effect if the sales return of 50,000 posted 48,200 and purchase return of 46,000 posted as 47,800? Acha, now the point is, what will be the effect? There is a sales return. Sales return is on the debit side, and we have posted less. 1800 rupees is undercast in terms of the debit side, while purchase return of 46,000 posted as 47,800. That means purchase return, that is our credit side. Purchase return is at the credit side. The credit side is above by 1800. This is overcast. So in this case, what's happening? Our expenses are somewhat sales return, cancellation of sales is done more, right? It is done currently. It should be 50,000. We have done it less than that. So probably we haven't booked the proper reversal of our the income there. That means this is a portion of a loss which is not booked yet. And the purchase return of 46,000. Now something which was supposed to be noted as purchase return, we are giving the goods back to someone and we have recorded it more. That means I have booked that as something that is going out of my hand, right? So in this case, the purchase return is basically something that increases our income, and we have shown our income more than what it was required. So technically we have made both the things work, and ultimately now the profit and loss will increase by 3,600 in this case. No, it will actually decrease. The answer is C, not B. The reason is 1800 is undercast. 1800 is undercast in what case? The sales return. Our sales is getting lesser by 1800, and we have shown that the purchase return is of 46,000. We have shown that we have given back more. So we have shown that we have lesser expense right now. So basically the expense is overbooked, and our income, our sale reversal is also underbooked. That means in both the cases, this is going to have a negative impact on our sales, and it has gone, reduction is there up to 3,600. So that would be the answer. That should be decrease, not increase. Let's look at the next question. Provision for bad debt is made as per entity concept, conservatism, cost concept, or going concern concept. On what basis do we record it? Provision for bad debt. Bad debts means the debts which the particular person is unable to pay, right? There was a certain person who was supposed to pay us and he didn't pay. Now that particular point is covered here. That would be in the area of entity concept, conservatism concept, cost concept, or going concern. The provision for bad debts is made up. It is made up of conservatism concept. Conservatism means anticipate the losses but not profits. Right? So in this case, we are anticipating here that yes, in the upcoming future, there is a loss coming up, and that particular loss is covered here, right? So it would be conservatism concept. Accounting standard AS10 deals with fixed assets, depreciation accounting, consolidated financial statements, and accounting for taxes on incomes. AS10 is actually linked with property, plant, and equipment. So it is related to the area of fixed assets. Okay? Then depreciation accounting is AS6, and remaining are somewhat, they are covered in the higher levels. None of them belongs to AS10 there. So in this case the correct answer is fixed assets. Here comes the next question. The next question says, which of the following is a revenue expenditure? Expenditure for used machinery part for sale, purchase of motor car, purchase of building, or cash paid for audit fee. When we are trying to look forward towards revenue expenditure, what do you mean by revenue expenditure? The expenditure that we are incurring on the daily basis of the organization. Okay? So since it relates to the daily basis work of the organization, machinery is a big asset, motor car is again a very big asset, building is very big asset. These assets are not used for 1 day or 2 days, they are used over a period of time. And cash paid for audit fee. When it comes to audit fees daily basis operations. Daily basis means every year you have to conduct audit, है ना? So every year you have to get the particular bank audit done. There are organizations which are getting concurrent audit done. Every month they are getting done. Quarterly they are getting done. They have to pay to the auditors. They are not making any asset out of it. So in this case it would be the cash paid for audit fee. Next question. A purchase invoice is recorded in the purchase book day book as 18,500 without taking into account 10% of the amount offered as trade discount. So technically 1850 was the TD that we received, but we didn't record it. So what's happening in this case? See, if it is overall missed, this is a case of omission. Though it is wrong, but it is omission. They forgot about it. So the excess credit 1850, excess debit 1850, excess debit 3700 or no impact. Since it's a case of omission, something which is not recorded at all, we just recorded the supplier and our books. That is, we purchased something for 18,500. No recording of this particular discount is there, so there is no impact. Right? Here comes the next question. The next question says that a sales invoice for rupees 21,000 has been posted to the customer's account as rupees 12,000. Now we have exchanged the particular point. It was something which was 21,000, I wrote it for 12,000. So is it excess credit of 12,000? Excess debit 12,000, excess credit 9,000, or excess debit 9,000? In this case, the correct answer would be what? in this case, the point is the difference is of 9,000. A sales invoice, since the sale was of 21,000 and we wrote it for 12, technically the difference of 9,000 is occurring here, है ना? That means we will have to put the income. Excess credit of 9,000 is now required because we have written it as a lesser amount, and we should note the entire amount. Next question. It says that a trader disposed of old equipment with a book value of 3,500 for 3,900. How would this transaction be treated in the books of accounts? How will you treat this? Capital receipt 0, revenue receipt 3,900. Capital receipt 3,900 and revenue 0. Capital receipt 4, revenue 35, then capital 35 and revenue 4. A very basic question. See, the point is, what is the value of the asset that has gone by? It is the office equipment, which is a capital expenditure. That 3,500 is the capital expenditure. So basically, this is my capital receipt. And whatever profit or loss you make, it goes into the profit and loss account. So we call it revenue receipt. Right? Whatever money you make over and above that particular asset, due to the sale, due to the purchase, then we will be recording it here as a revenue receipt. Done? So the answer is D. Capital receipt 3,500, revenue receipt 400. Now, the concerned account debited with the journal should be debited in the ledger, but the reference should be of the respective credit account. Credited in the ledger, but the reference should be of the respective debit account. Credited in the ledger and reference should be also of respective credit account. Then debited in the ledger and reference should be also of the respective debit account. When we talk about concerned account, debited, if I talk about ledger na everyone, the portion that would be debited, the credit portion of the entry would be shown here, but the amount of debit would be shown. That's the basic rule, that this particular account was credited when the given account was being debited. So we'll have to show, if it is a debit item, in the table even it would be shown on the debit side. There won't be any credit side there. Right? We will be debiting it, but what would be the respective credit side? For example, if I purchase and I pay cash, so in this case what will happen? If I am making purchase account na, purchase account, here it is debit, so on the debit side I will show, and this is the credit side. On the debit side I'll show it as 2 purchases. Okay? Debited in the ledger, but reference should be of the respective credit account. Done? Now let's look at the next question. Unintentional omission or commission of amounts and accounts in the process of recording transactions are known as frauds, misinterpretation, errors, or none of the above. What would be the correct answer in this case? Unintentional omission. You forgot about something. If you intentionally do it, then it's a fraud. You just did it unintentionally. You forgot about it. Or commission. something that was related to Mr. Ram written in the name of Mr. Sham. A normal mistake, right? When you make such mistakes, they are covered under frauds, misinterpretation, errors, or none. They would be covered under the topic of errors. Next question. It's an effect of an error is cancelled by the effect of some other error. It is commonly known as error of principle, compensating error, error of omission, or error of commission. If an effect of an error is cancelled by some other error, matlab maybe what has happened is the error has happened in debit and a similar error has happened in credit as well. So in both the areas the mistake is almost the same. Then what would you do? Is it an error of principle, error of commission, omission, or compensating errors? When the same error is on the debit as well as on the credit side, such errors are called compensating errors. Okay? They are called the compensating errors. So that's it for the day, everyone, and the registration process for the examination is over. So if you're looking forward to it, then what you can do is you can take up our courses. Let me show you where to go, and you just have to go to our website and go on to the area of JIB and CIB. Look at this area, JIB and CIB Mahapack. Under the JIB and CIB Mahapack, you can look at the JIB CIB Mahapack, and you can also look forward towards our JIB Mahapack 2.0 that is also available on the website. And what you can do is, if you are preparing only for this particular area and you don't want to go ahead and look forward towards other things, then what you can do is you can take up only the JIB normal or regular classes as well. In this case, you will get just an English medium batch or just a bilingual batch. And if you are looking forward to all other classes, then what you will have to do is you will have to take up the Mahapack that you can see here. Under the Mahapack 2.0, you will get more benefits, as under this you will get the live classes, recorded classes, test series, bilingual as well as English medium. Both the classes would be available. Revision batches would be opened up for you. All those things would be available for you if you take up the Mahapack. In terms of the classes, this is what you will get: the PPB, I&FS, AFM as well as RBWM. So if you're looking forward to it, kindly check it out on our website or in our app for further details. Right? You have to go on to the area of www.adda247.com, and kindly don't forget to download the app, because if you're doing it through app, then you get more discounts, right? And if you're looking forward towards the further working there, then what you can do is you can also take trial balance and errors of trial balance. And how are we going to look at it? Let's continue and talk about it. I hope you remember the registration period is going on. If you haven't registered for the examination yet, then kindly go ahead and register yourself as early as possible, because the time is limited, and after the second week is over, then the late fees will also increase, and the last date to fill up the form is 21st of August. Let's move on and talk about the first question. Today I'll be talking about trial balance and errors. Trial balance is the statement that we prepare after journal, then followed by ledger. This case, what happens is, first of all, the organization will prepare journal. What is journal? Journal is recording all the entries in an individual manner. That means this happened, then this happened, then this happened. That is journal. Then we create a ledger. Ledger is basically the tabular form of it. Tabular form means you will create it in the table form. Whatever you're getting, whatever you are losing, all those things are noted down there. Then you prepare a trial balance, which is actually a statement. Okay, then this is a statement which they prepare ultimately. Now let's look at the question. Wages paid to the worker making additions to machinery amounting to rupees 5,000 were put into the area of wages account. Identify the type of error. While making this trial balance, sometimes there are certain errors that will come to you notice. Then those kind of errors are they have to be rectified. The ones which can be detected have to be rectified. So when we look at the various kind of errors, there are overall 4 to 5 types of errors, and they are all stated here. First is error of principle. If an expense is noted as an asset or an asset is noted as an expense, that means either it is going to be a debit side based error only or a credit side based error only. What they do is, on this side, see, if something is basically furniture, instead of writing table, you write chair. The total remains the same. It's just that the classification went wrong. In the same case, you bought table but you wrote it as a repair expense. This is called error of principle. So when you are, now in this case it is actually that only. Right now, since we were making our machinery, we were building our machinery for 5,000 rupees, but somehow we wrote it as if we have given wages to the person. We are not paying wages, we are actually building a machine. So that means it is an asset to us. So in this case, an asset is noted down as an expense. Is it error of principle, compensating error, error of omission, or error of commission? In this case, the correct answer would be error of principle. Okay. Other errors, compensating errors means same error on the debit side, same error on the credit side. Since it's the same, then we will find it out. Error of omission is we will not be able to find it out. Compensating errors are very difficult to track because both the sides have been making the same mistake. Same amount, 100 rupees there, 100 rupees there, then nobody can find it out what exactly went wrong. Omission means to forget. So you forgot the journal entry altogether, then you cannot find it out. But if you have noted it half, then you can still find it out. Those are called partial omission. Last is error of commission. You note the name wrongly. Those you didn't to the wrong account. That is called errors of commission, or they are part of clerical errors. Next point. Which of the following is not an error of commission? A sale of rupees 560 not recorded in the books at all. Rent paid to the landlord was posted to the landlord's account. A purchase of rupees 840 was wrongly written in the sales, and instead of crediting Sham, it was credited to another Sham. I told you, they're putting into the wrong account. Then a sales of 560 not recorded in the books at all. This is error of omission. You forgot to record it totally. That is called error of complete omission, not half or full. It is complete omission. You forgot to record it. What is the main purpose of preparing a trial balance and rectification of errors? We do all these things so that we can actually find out the arithmetical errors, nothing else. There is nothing else you can find. I can never say that just because I prepared the trial balance and it matched, the books of accounts are absolutely fine. After this, the auditor will sit down, they'll find the documents, they will check out the authenticity of the things, right? So that would be a little difficult to find out. To know the bank balance, to identify the causes of difference between cash book and bank statement, or to correct the cash book, or to know the balance of the bank statement. When we are preparing trial balance and errors, actually we do not look forward to anything. We are to correct the cash book. Nahin. This is bank reconciliation statement. The question has to be changed. we prepare bank reconciliation statement for this? The question is wrong. Why do we prepare bank reconciliation statement? We try to do it so that we can correct it. Next question. It says closing stock in the trial balance implies that it is already adjusted in the opening stock. Then it is adjusted in the sales account, it is adjusted in the purchase account, or none of the above. Now the point is closing stock is in the trial balance. Closing stock is normally not shown in the trial balance because anything that is covered in the trial balance has to be noted twice, debit and credit. Only then the trial balance matches now. So if you are putting it into the trial balance, then you will have to adjust it in the purchases. There is a term called adjusted purchase. It is noted as opening stock plus the purchases minus closing stock. So how does it exactly look in the trial balance? It looks like in the trial balance we will show adjusted purchases here and we will show the closing stock here. So one time the closing stock is deducted and one time it is added. So the ultimate effect will be 0. Adjusted in the purchases, and such purchases in which it is adjusted is called adjusted purchases. Next question, which of the following errors will be rectified through the suspense account? Suspense is a dummy account that we create. So when we create a dummy account, it is done for one particular purpose. So that the purpose of creating a dummy account is to find out where exactly the differences are coming. All the wrong things are collected in suspense account first, and then slowly and steadily we will rematch things. Which of the following errors will be rectified? Sales return recorded through purchase, then sales return is not recorded, then sales return is recorded as 2000, then sales book is undercast by 20,000. So I think if I talk about it, it would be the area of undercast, because we don't know from where the particular thing is going on. For every other thing you will see there are two impacts. Sales return XYZ, sales return XYZ. You know, sales return, both the elements of journal are visible. In case of undercast, that means you don't know which particular portion is there. Sales return, the nature of sales return is debit. It is debited a little less, the value is little less. So in this case we will take sales return has to be debited again, but the portion that is to be shown in this lower area is not known to us. So I'll write it as suspense account, which is a dummy account. So I'll take it as 20,000. Okay? So in this case it is sales return are undercast. Under means whatever the original value is, we are putting it less than the original value. That is called undercast. Which of the following is not an error of commission? Error of commission means account based errors, clerical errors, then putting 1 0 instead of 2 zeros, those kind of errors. Are they wrong balancing of machinery account? Credit sales to Pawan 5,000 credit to his account. Cash sales not recorded in the cash book, or overcasting of the sales book. Which of the following is not an error of commission? Wrong balancing can be there. This is a part of clerical error. Credit sales to his account. Okay. Cash book not recorded in the cash book and overcasting. If I look at the entire portion, it would be C, because cash sales is not recorded in the cash book. This is not something which is a commission based account. See, the Pawan's account, this is related to his account. There was an error in recording it. Overcasting is again, you were supposed to put it in this book, you didn't put it, so that is also a commission error. Wrong balancing is also commission error. So in this case the correct answer would be cash sales not recorded in the cash book. Next point. The machine is purchased for rupees 10,000, which was wrongly recorded in the purchase account. Due to this error, trial balance will show a difference of 10,000. Trial balance will not show any difference. Trial balance will show a difference of 20, or it will show a difference of 5. A machine is purchased for 10,000, which was wrongly recorded in the purchase account. Acha, theek hai. In this case, there was a machinery shown on the debit side as 10,000, but it has been entered into the purchase account. Both are on the same side. So instead of putting here, I put it here. The 10,000 is written, but in a different head. So in this case, there is no problem in this question, isn't it? There is no issue with this question. So the trial balance will not show any difference. This is called an error of principle. This is called error of principle. Such an error occurs when we record the things in the books of accounts, but in such a way that we are recording it only on one side rather than both the sides. Trial balance will not show any difference. All the following statements are correct except trial balance is a statement, not an account. Trial balance is always prepared at the end of the year. Agreement of trial balance is not a conclusive proof of accuracy. Then trial balance will tally if an entry is posted twice in the ledger. It is a statement, that is also correct. Then okay, I hope the question is completely visible to you now. Trial balance is actually a statement, it's not a book. In this we record everything that has happened into the books of accounts. So this is correct, that it is basically a statement. Then such rule that trial balance has to be prepared at the end of the financial year only. It can be prepared before that for interim statements as well. So in this case I believe I'll go with B, because in C, agreement of trial balance is not a conclusive proof. That is correct. Then trial balance will tally, because once you put the journal entry twice, it will still match, though it's wrong. But when things are recorded properly, then it will match. So in this case there is only one point which is wrong, that is B. State expenses for moving machinery to the factory are capital expenditure, deferred revenue expenditure, revenue expenses, or none of the above. Freight expenses, see, I am moving a machinery from one place to another. That means it is required to move it now. Otherwise, how will I do something there? Normally now, okay, now this is a controversial point, because in certain books you will find that shifting and moving related. If you are moving the entire business to a different place, then you will take it as a deferred revenue expenditure, because you are disassembling it and then assembling it again. So the answer will come out to be deferred revenue. But in certain books you will find it as capital expenditure. But if you are moving